Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. I have been warning over the last weeks that the DXY is only in a correction and that new highs are the higher probability and have been the higher probability move next for the dollar index. We are now approaching new highs, and when we go and look at the scorecards, you will see that opportunities are now coming back into the markets after this period of contraction in DXY. Okay, so a brief look at the economic calendar because there's not too much we need to pay attention to for the coming week. But last week we did have the raising of interest rates out of New Zealand, nothing which wasn't already expected, and we actually saw the New Zealand dollar selling off. Going into this week, the New Zealand to the downside is something we're going to look at, but I don't think it's the best opportunity next week. But New Zealand shorts are something we're going to look at in this video. In terms of the UK, we did have CPI coming out above expectations and above what it previously was. And usually you would see the pound rally on this because traders would be forward looking, or markets would be forward looking at this piece of data and say, well, the Bank of England going to raise interest rates in order to control this because inflation is greater than anticipated. However, we saw the opposite. We saw the pound selling off because the Bank of England have forecast a year-long recession starting in Q4 this year, going all the way through 2023, and they are not going to hike rates aggressively with this pretty substantial recession on the horizon. And as a result, the markets are looking at this and saying, well, they're not going to actually raise rates aggressively to control this. And inflation is probably going to come down during the recession itself as demand gets destroyed. So we saw a sell-off in the pound. And the other important thing from last week, we did have some data coming out of Australia, but it was the retail sales out of the US, which actually beat expectations. And this sets up dollar long plays fundamentally once again, because the whole time the US economy is actually doing slightly better than forecast, although it's not fantastic currently. And all the other economies like the UK are heading into a recession fairly imminently, especially the EU and Germany. This sets up the fundamental scenario of the Fed having more room to be aggressive with rate hikes, and the Bank of England, the European Central Bank, for example, not having that same amount of room and actually having to ease or loosen monetary conditions earlier than the US. And this is fundamentally bullish for the dollar, bearish for the pound, bearish for the euro vis-a-vis the dollar. So not really something we need to dwell on, but it's just interesting to note the discrepancy between some of the data coming out of the EU, the UK, and also the US, which is going to allow the Fed to hike for longer than its counterparts in the UK, EU, etc. And if we just jump ahead to this week, you can see there's not really too much we need to pay attention to. We do have core PCE coming out on Friday. This is the Fed's preferred measure of inflation, so I expect some volatility on Friday. However, the rest of the week, we really don't have anything we need to plan short-term trades around. The preliminary GDP is essentially following on from the advanced GDP we've already had. And the Jackson Hole Symposium as well towards the end of the week. Again, maybe we see some volatility on comments out of the Jackson Hole Symposium, but this is not anything we need to plan short-term trades around. So we pretty much have a clear run at the markets this week. Okay, so let's have a look at the scores for the coming week. And starting with last week, you can see that the difference between last week in the scores and this week is there's more volatility in the scorecards themselves. You can see that means more opportunities are coming in. And this is when we should look to actually take more risk as opposed to the last few weeks where we've had less opportunities and we're looking to take less risk. And you can see as well that the US dollar and the euro are now both at opposite sides of the scorecards. They were last week, but the US dollar only just, and it was kind of neutral before then. Whereas now we have a clear difference between the US dollar, which is actually bullish or strong bullish, and the euro, which is bearish. So this is telling you opportunities are likely to come back into the markets. Markets are likely to move, and we can now be looking at taking more trades or more risk than over the last 3 weeks. And in last week's video, we were looking at Swiss franc and Japanese yen plays. The Japanese yen actually weakened, and this is not totally unexpected because I had highlighted in previous videos that we were actually trading a counter trend move essentially in the Japanese yen. It was moving up, but it was still below the major breakout level, and it was essentially a counter trend move in a bigger trend. So generally I don't trade counter trend at all, but when you have very large counter trend moves in the weekly or in the monthly, they can go on for many, many weeks, and so you can trade them, but certainly not intraday or really even daily. I would be trading counter trend moves. And this is the exact reason why. Whereas the Swiss franc, which was actually trending to the upside, we noticed previously, you can see this increased its score, and the Swiss franc pairs were the best plays last week. They actually performed the best. Euro franc to the downside, for example, pound franc to the downside were some of the best performing markets. But coming into this week, the US dollar is now giving a strong bullish probability score on a 1 to 4 week forward-looking basis. So US dollar long plays, I'm definitely interested in next week. Swiss franc long positions, I'm definitely interested in once again next week. The pound is the weakest currency, so I'm going to be prioritizing pound shorts, and that will be pound franc to the downside, pound dollar to the downside. Because the yen is weakening, I'm actually going to leave the yen this week. I am going to once again be interested in euro shorts, and euro and pound again were the best shorts last week, and they are once again the best shorts this week. So I'm going to be looking at euro franc again. I'm going to be looking at euro dollar to the downside this week for the first time in a few weeks. And those four currencies are going to make up my primary trading plan. They, in my opinion, will be the best opportunities to make money next week. But because the New Zealand dollar is also weakening, and we also have the Canadian dollar, which is quite weak, we can also look, and I'm going to look at New Zealand dollar to the downside, New Zealand franc to the downside, and also CAD franc to the downside, US dollar CAD to the upside. Okay, so let's have a quick look at the individual currencies before we move on to the markets themselves, just to see what they're doing. The DXY, as I've stated for a while now, is the only currency really in a full-blown bull market. The previous down move was a correction, and we have broken out of this, and we're starting to make our way towards new highs and the previous target of the 109.76. We're also still above the major breakout level of the 102.992. There is really nothing bearish currently about this chart, and going into next week, DXY long plays are one of my favorite plays. I did tweet out on the 17th, which was right here, that the DXY for the first time in the scorecards had turned from bearish to neutral, and to look out for dollar long plays into the end of the week. And that was actually when we had the subsequent rally in the dollar over the next couple of days. So feel free to follow me on Twitter, because I do post market updates on there during the week as new information comes in. But going into this week, I am going to be looking for a pullback early and a move into the high and also the 109.76. And I do believe that this move up here is going to be one of the best places to make money next week. Next is the euro. I've been warning previously that this move was a correction, and a lot of people got excited about this. I don't know why, because we didn't even manage to clear the 7-year breakout level of the 1.03750. And in fact, all this was a breakout of a 7-year range and a pullback and a retest, and now a continuation. Once we take out the low down here in the euro, very often, especially when you consider this is a break, a pullback, and a retest of a 7-year breakout, there could be some real trouble for the euro below this low. Once this low gets taken out, all of the buyers who bought in here, who do not realize that this is a 7-year breakout and up here is a 4-year breakout, they all place their stop losses. Some of them place them up here and they've already capitulated, which is why you're seeing momentum coming in. But the rest of them, especially ones who bought up in this area and are currently underwater, their max pain point is probably going to be this low. So when this low gets taken out, we could very well see a very strong sell-off in the euro, and it could actually be the beginning of a crash in the euro. Now, I don't want to use the word crash too much because it can be overused and it can be a little bit sensationalist, but when you have a 7-year breakout and a retest and a break of the previous low like this, there is real risk here of capitulation in the euro. So keep an eye out for this next week. I do not at all want to be bullish on the euro next week. I'm only looking to shorts, and I think euro shorts are one of the best plays next week. When you consider this as well, this potential setup in the euro and the risk of capitulation, consider that alongside what we will look at very briefly in the stock market later, which is that the stock market in the US may now be about to roll over. And if that's the case, we essentially have the US stock market and the euro, or in other words, the dollar, both showing potential for capitulation. So something to keep in mind. And I have been warning that the previous rally in US stocks, in my opinion, is most likely a bear market, and the next leg down is not too far away. And in fact, I highlighted the VIX at 1850 as the point at which to potentially pinpoint the next reversal to the downside. Next is the pound. I have previously been warning that this is most likely just a correction in the pound, and we're set for further declines as the dollar rallies, and we are now coming down to the 1.1734. Again, pound shorts are one of my favorite plays heading into next week. Next is the Swiss franc. The Swiss franc is bullish, technically speaking, and it's actually the strongest currency in terms of a 1 month forward-looking probability score. So I do favor Swiss franc long plays vis-a-vis the other currencies next week, but you can see that this is actually selling off a little bit. So it isn't technically speaking very, very strong like the dollar is, but vis-a-vis the other currencies and on a 1 month forward-looking basis, the Swiss franc is still a good long. And Swiss franc long plays certainly against the pound and the euro. We can also look at the New Zealand, but certainly the pound and euro are two of my favorite markets heading into next week. Next is the Japanese yen. Now this is what I was talking about previously, where I highlighted in previous videos, this was the major breakout level in the Japanese yen, and we were still below this, so this was not particularly a bullish chart. But in the very near term, we got the sign from the scorecards that we could see a strength in the Japanese yen. We did actually see that, but now it started to roll over again. So really looking at this technically, this is actually a fairly bearish chart, and with the scorecards themselves contracting the Japanese yen score from 2 to 1, I do think we're probably going to see further declines, at least down to the lows in the yen. But I'm going to be leaving yen trades completely next week, because if we do get a strong sell-off in, for example, US stocks, you could see this snap back in your face if you're trying to short the yen. So I'm off the yen next week. Next is the Canadian dollar. We've started to break to the downside from the previous resistance area. We never really got through this, which I highlighted 0.78210 in the last few weeks. And we have now started to break down. Looks like we're actually forming head and shoulders. So next week, I'm going to be looking for a pullback in the CAD pairs, and look for this next week in the CAD pairs. It may actually take a week to pull back and then roll over in the next couple of weeks. But overall, I would be bearish on the CAD. We can look at CAD shorts in today's video vis-a-vis the franc and the dollar, but I actually prefer pound, euro, and New Zealand shorts next week over CAD shorts. Next is Aussie dollar. A failed inverse head and shoulders break, and we've now started to sell off with momentum. We have momentum here because all the traders who traded this to the upside, counter trend, basically got caught short. They pulled their long positions, and this caused the capitulation we see here. Probably going to see a short-term correction next week, which will fit in with a correction in the dollar. And then I'm looking for further declines in the Aussie pairs down to the 0.6689. You could also look at Aussie shorts next week. It's just that the scorecards are saying the pound, the euro, New Zealand, and even the CAD are better shorts next week. So I absolutely wouldn't be long the Aussie. If I absolutely had to take a position in Aussie pairs, which I don't, but if I did, I would be short. But I'll probably not trade the Aussie pairs next week based on what the data is telling me. And finally, New Zealand dollar. We had the big whipsaw in New Zealand dollar with the inverse head and shoulders breakout, and then a failure of this now causing capitulation momentum to the downside. I'm looking for a correction next week, early Monday, Tuesday, let's say, and I am looking further declines into the lows and into the 0.600. And this sell-off to the downside, especially if you pair this versus the Swiss franc and the dollar, I do think there's going to be potential to make money in New Zealand shorts next week. Okay, so let's drop down to the 4-hour chart and look at the markets themselves heading into next week. Last week, we took out the target in crude oil. I am still bearish on crude oil. And in fact, back in June, I posted on Twitter that the data was suggesting crude oil has topped, and crude oil is actually down almost 20% since I tweeted that out. And that was actually at the same time JP Morgan were forecasting $380 per barrel. I do not think crude oil is heading any higher, and I do think, as I say in this tweet, that the next leg down in stocks will be with crude oil and vice versa. Going into next week, I am still bearish on crude oil, and any pullback is simply viewed as another opportunity to look for bearish reversals into the 84.49. So the first Forex pair we're going to look at is pound franc, and pound franc is a market that I highlighted in multiple videos previously as a good short opportunity. And I did also highlight the fact that there was pretty much nothing but air between the last breakout and the 1.1119, and we are starting to come down here with momentum. We have a really nice breakout of this previous correction here, and you can see this is with momentum. So any pullback in pound franc next week, and this is my number one Forex pair I'm going to be looking at next week to make money, any pullback is simply viewed as an opportunity to look for bearish reversals down to the next key area of support at the 1.1119. Next is Euro Franc. We took out the target to the downside at 0.96530 last week. Euro Franc has been a great performing market and been shorting this pretty much all the way down. We've been looking at this in previous videos. I am still looking for the 0.9577, and any pullback in this market next week is simply viewed as an opportunity to look for bearish reversals into the 0.9577. If we switch to a weekly chart, just very quickly, I highlighted in last week's video, we've now broken the low of the 2015 Swiss franc shock. Look at this chart. This is as bearish as it gets. And bear this in mind also, alongside the fact that the euro index and even the euro dollar, it has now retested a 7-year breakout and started to turn from that level. There is something by the looks of it brewing in the currency markets for the euro. It does not look good. It looks like there is the real risk, as I said earlier, of a big sell-off in the euro. Next is New Zealand franc. Now, New Zealand franc is an interesting one because it reminds us of something about the scorecards. We have had New Zealand franc pretty much on the radar for the last couple of weeks, and we had the US CPI data come out. This saw the New Zealand spike, and it kind of just chopped, but the scorecards themselves are 1 to 4 week looking probability scores. So if you get the market move against you for a week or so, but the scorecards are still showing Swiss franc, for example, as one of the best longs, and the New Zealand as kind of neutral or maybe bearish, that is suggestive of actually, in this case, a selling opportunity. The market has moved against what the scores are projecting, but the scores are holding up, and therefore over the next 3 or 4 weeks, even if you get a week or so of the markets moving against them, the higher probability is for further declines, and that's exactly what we saw in New Zealand franc. We have now started to break out of this larger correction, and any pullback next week, maybe we come down, take out the target first. If we pull back before taking out the target, I'm going to be looking for shorts into the 0.5904. If we take out the target and then pull back, I'm going to be looking down towards the next curve support to the downside at 0.5838. Next is CAD Franc. We took out previous targets, the 0.7364 and the 0.7310. Heading into this week, it's not in my top 6 markets here, or Forex markets, because I also like silver and Bitcoin, which we're going to look at, but it's not in my top 6 Forex picks. However, I am still going to be looking for potentially good bearish setups in CAD Franc if they materialize, especially if crude oil continues to sell off. So any pullback, although it's not in my top 6, any pullback is still going to be viewed as a potential opportunity to look for bearish reversals down to the next key of support to the downside, 0.7250. Moving on to the dollar pairs, and pound dollar is one of my favorite Forex markets. It's my second favorite, or you could say third favorite maybe after euro franc, but really, in fact, I would say pound franc followed by pound dollar, euro franc. They're all kind of the same. It's in my top 6 setups next week, and it's one of the best opportunities in my opinion. We do have a head and shoulders breakout with momentum, so any correction in pound dollar, there's a high probability that that is going to result in further declines to the downside, and I'm going to be looking for shorts into the 1.1715. Next is euro dollar. I did previously highlight the fact that euro dollar was in a correction and it was pulling back to retest the 1.03434, which was the major breakout level. We have reversed from here, and euro dollar is back on the table. We have a head and shoulders reversal in this area and downward sloping. Any pullback with momentum, any pullback is going to be viewed next week as an opportunity to look for shorts in this market down to the 0.9927. It is one of my favorite opportunities heading into next week. Next is New Zealand dollar. We've actually broken out of a large counter trend move here, and we are breaking with momentum. Any pullback, and I do think we're probably due a pullback first, any pullback is viewed next week as an opportunity to look for bearish reversals down to, first of all, the previous low, and then on to the 0.6015. And New Zealand dollar tops off my 6 favorite Forex markets heading into next week. And the final Forex market we're going to look at here is US Dollar CAD. We have broken out of an inverse head and shoulders here, and I am going to be looking for any pullback next week as an opportunity to look for bullish setups into the 1.3203. It may take a couple of weeks to get here, but I do think we're heading now back to the 1.3203. It doesn't make the top 6, but again, just with CAD Franc, I am still going to be looking at it for potential opportunities next week. Okay, so wrapping up with gold, silver, Bitcoin, and we're also going to look at stocks very briefly. The gold-silver ratio is breaking back to the upside, heading towards the 95 level, and you can see momentum here in the gold-silver ratio. So I am bearish on gold and silver, both of them, as well as Bitcoin, but I prefer silver shorts over gold shorts, as I think silver shorts will outperform gold shorts next week. Next is gold. Now, gold has started to break to the downside, and it pulled back and retested the 1787.31. I have been highlighting in previous videos that gold was likely to come back and test the previous low, and that was when we could start to see it roll over. Same with silver, same with Bitcoin. We just missed the previous low in Bitcoin, but that was likely to also be the first sign that stock markets were likely to follow, and the DXY was likely to rally. So going into next week, any pullback in gold is simply an opportunity once again to look for bearish reversals down towards the next key of support to the downside and the target set at the 1676.87. Next is silver. Now, silver, as I said, is my preferred short out of gold and silver next week. We do have a strong dollar, so I do expect further declines in these markets. Again, we came back and retested the previous low, as I highlighted in previous videos and just said this was counter trend and that upside was really capped. And if you get involved in silver or gold longs in this area, you're running the risk of picking up pennies in front of a steamroller because the upside is capped and you have the risk of the biggest sell-off as the DXY rallies. So we have now turned at the previous low. Heading into this week, we did have a double top reversal in this area in silver. We came back and retested it and then we sold off. Any pullback therefore is simply viewed as another opportunity to look for bearish reversals down to the next key area of support to the downside of the target set, the 17.63. And last but not least, before we have a quick look at US stock market, is Bitcoin. I have noted in previous videos that Bitcoin is in a correction. This is a bear flag, this is corrective, and that I am looking further declines. And because we had such a strong sell-off previously, we have a longer period of contraction. Well, we failed to pull back and test the low like we did in gold, like we did in silver. We just missed it. And there was quite a big reversal to the downside. We have very, very strong momentum here. And so this goes into the list of top markets to look at to make money next week. Any pullback in this area is simply viewed as an opportunity to look for shorts down to the next key area of support to the downside at the 16,492. Bear in mind that Bitcoin is highly correlated with US stocks, especially the Nasdaq. This is one early indication that the recent bear market rally in stocks is now coming towards an end. So finally then, a look at the S&P 500 as we've been monitoring it in previous videos. We are above the 4177.51 and we did break above here with momentum. We did see some strong sell-off at the end of last week. However, when we go and look at the VIX next, you will see we're not quite at the 1850 level. I do believe it's the 1850 level still that really has the potential to spell danger for US stocks and where we could really see a reversal to the downside in stocks. So we did have a strong sell-off at the end of last week, but don't be surprised if we get one more rally as the VIX trades into 1850. And that will be the point at which to start to look for a reversal in US stocks, perhaps even a double top. And if we start to break below the 4177.51, which in last week's video I compared the current S&P 500 conditions to that of 2008, the break below the 4177.51 would be the next key confirmation of the next down leg in US stocks. So to summarize this for you, I am still looking for the VIX to head into the 1850 area. That may result in a double top in S&P 500. That would be the first time to actually start to look for a reversal in stocks. And if you start to see volatility accelerating from the 1850 in the VIX, look for confirmation on a break or a close, or better still, multiple closes below the 4177.51, as that is where the next leg down in US stocks is likely to start if we get volatility from the 18.50 VIX, which has been my base case for a while. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.